how high do you think interest rates are going to go? So we speak to all the banks we work with, and we've kind of asked the same question. From what we've heard from the Bank of Canada, they are extremely bullish in regards to being able to make their increases on their overnight lending rate. That is going to happen as soon as the economy starts to get back to some sort of sense of normalcy. Now, for anybody who doesn't really understand economics, essentially the way it works is the Bank of Canada increases their overnight lending rate, which increases prime rate, and prime rate affects all different types of borrowing. So credit cards, lines of credit, car payments, mortgage loans. When interest rates start to increase, the economy starts to contract a little bit, contracts a little bit. So people stop spending money, and that puts kind of people in a recession. But that's got to stop the inflation. So what the government's going to try to do, and they're kind of balancing it right now, is raise interest rates to combat inflation because asset prices and everything else is increasing at such a rapid pace. We expect at least 3 to 5 rate hikes this year, meaning usually it's increased at 0.25 basis points every single rate hike. So minimum 75 basis points to 1.25%. So if you're in a variable term, so it doesn't necessarily go 100% in tandem. The Bank of Canada hasn't increased their interest rates yet, but all the large financial institutions have already started to increase their fixed and variable terms. So we're already starting to see it. We saw a rate hike last week. Yeah. A handful at Scotia is increasing their rates tomorrow. A handful of these larger banks are going to start pricing it in, and you are going to see a drastic increase in your borrowing. I think that's going to affect a handful of things. Is it going to stop the market? I don't think so. I mean, we're all qualifying at 5.25% anyways, so that interest rate doesn't necessarily affect the true qualification at the moment, but it is going to affect your overall monthly payment.
Yeah, and if you're wondering, just to touch base on variable rates, because this is really what we're kind of focusing on right now. There's two ways your variable rate could potentially increase or decrease, and one is, I guess to explain how variable rate works, it's a discount based off of the Bank of Canada prime rate or the bank's prime rate. So right now, prime is 2.45%. Your variable rate is plus or minus that 2.45. Most of the variable rates are prime minus 0.9 or 1% right now, and they just go up. So banks can increase their rates by decreasing that the discount off that prime. So instead of prime minus 1, maybe it's prime minus 0.9 or prime minus 0.85. So that reduces the amount of deduction you get off that prime. The other way is if the actual Bank of Canada prime rate goes up, that does have an effect on your rate as well too. When you lock in or when you get into your variable rate, your discounted rate is going to stay the same over your 5-year term or your 3-year term, whatever it is. So if you get a prime minus 1%, your discount's always going to be that minus 1%. But if that prime rate goes up or down, your interest rate can still change based off the prime rate. So there's a couple ways your variable rate can be affected. But
I think one thing I was going to say on the agent side, because I'm getting a lot of questions about this too, like, hey, if rates go up, what do you think that's going to do to the market, right? And I think having gone through this a couple of times now, my experience and what I personally think will happen is you're going to have the media loves to eat this up, right? So we're going to have a lot of media exposure around this. They're going to take one data point and they're going to run like hell with this. And so what usually will happen is it might shake up the market temporarily though. So if you do see that there's a blip where everybody else is like, what should I do right now? Like, maybe I'm just going to wait it out and see what's going to happen. That might be your opportunity. There might be a 2 or 3 week opportunity when you see this media exposure to come out where the market does go like, what should we be doing? Should I hold off? Should I not hold off? That might be the opportune time for you to say, okay, listings hit the market, media exposure comes out. Here's my window of opportunity to actually get a better price. And then once people realize, all right, it's not as bad as I thought it was going to be, then we usually go back to business as normal. So I've seen that happen in a couple of different cycles. So if you're looking like, not necessarily to time the market, but to say, where could my window be in the next couple of months? Like, wait to see if those things happen. Like, if a change happens and the media runs with it and they're like, oh, the market's whatever. If it's on pause and you're seeing not as many offers, that could be your opportune moment to like actually strike a good deal.
I think a great strategy for someone right now is find it in